So is overtime pay really tax-free now that the One Big Beautiful Bill has passed? Well, the short answer is there is a new deduction for overtime, but it's not as simple as all overtime is tax-free. It applies to what's called FLSA overtime. It's also capped. It phases out at higher incomes. And for 2025, your paycheck withholding will not change. They'll keep the withholding the same. So you're not going to see any immediate benefit because the IRS is not updating withholding schedules for it. So let me show you exactly how it works so you don't leave money on the table or get blindsided at tax time. I'm Merrill Taylor. I'm a CPA. We help high income earners and business owners cut their taxes proactively. This video is for educational purposes, not individual advice, so make sure you coordinate with your tax professional before taking any action. Now, the One Big Beautiful Bill created a temporary, not a permanent, but a temporary above the line deduction, which means you don't have to itemize to get this deduction. You get to take it as a deduction against your income on your return. So it's an above the line deduction for certain overtime compensation. It applies for tax years 2025 through 2028, so just a few years there. You'll claim it when you file your tax return, even if you don't itemize, like we mentioned, and it reduces your taxable income. The deduction is capped each year, and it phases out at higher income levels. Here is the big catch. This isn't a blanket exclusion of every overtime dollar that you earn. You can generally deduct the portion of overtime that exceeds your regular rate, which would be the half in the time and a half required by the Fair Labor Standards Act for non-exempt employees who work over 40 hours in a week. So if your base rate is $20 and your overtime is 30, they add an extra 10 for the time and a half, so 30, then your deductible piece is the extra $10 that you're paid and not the entire $30 that you're paid in overtime. So who qualifies for this benefit? Your overtime must be FLSA overtime. Hours over 40 in a work week paid at 1.5 times your regular rate, and you are a non-exempt W-2 employee. If your overtime is created by union contracts, state rules, or different federal statute, it may not qualify for this deduction, for this benefit. Some occupations covered by other laws, like certain railroad or airline workers, may have limited or no benefit under the definition used here. So let's do the math. Like we mentioned, in example one, $20 per hour, $10 of overtime. Overtime pay is $30 times 10 equals $300. You get paid $300 in overtime. The deductible premium is the extra $10 that you are paid times the 10 hours, so that equals $100. So if you're in the 22% bracket, that saves about $22 of tax for that week's overtime. Now, example 2 is you work 8 hours of overtime per week all year at the same rates. The premium is 10 times 8 times 52 equals $4,160. If you're in the 24% bracket, that saves almost $1,000 for the year. The benefit comes from the premium slice, not the whole overtime check. So most workers will see hundreds of dollars in annual savings. Heavy overtime could be low four figures into the thousands, into the low 4,000s, and it's subject to the annual caps and phase outs. So about caps and phase outs, the deduction has an annual cap for single and joint filers, and the value phases out as income rises. If you're near the phase out thresholds, you want to model out with your CPA so expectations are realistic. Now, let's come down to the withholding and timing that comes with these. For 2025, the IRS, the government, has come out and said that paycheck withholding tables are not going to change for this provision, so your pay stub won't reflect the deduction yet. You'll see the benefit when you file your 2025 tax return in early 2026. If you want your checks to reflect a break sooner, you can adjust your W-4 or your estimated tax payments. Just be mindful of the safe harbor rules to avoid penalties when doing that. Now, what doesn't qualify for this benefit? If you are in a salaried exempt role, such as an executive, administrative, or a professional, then you typically don't earn FLSA overtime. Comp time in the public sector isn't overtime pay, so there's no deduction without actual overtime wages. Contractor or 1099 arrangements aren't FLSA overtime, and overtime created by other laws or agreements may be out of scope as well. So how to document and claim this deduction? Number one, you're going to want to keep clean records of hours and pay that you earn. Number two, you want to claim the deduction on your 2025 tax return. To do that, you're going to want to save your pay stubs and year-end forms. As IRS guidance evolves, expect cleaner software prompts to pull in your overtime totals for the 2026 filing season and beyond. 3 quick planning moves when it comes to this. First, track your hours accurately. Your deduction follows true FLSA overtime. Second, model your year. If you're near the phase-out territory, the value may shrink, so run the numbers quarterly. Third, coordinate with other worker relief changes under the new law, like tip-related provisions, so you stack the rules accordingly and correctly without double counting. All right, so some quick rapid-fire frequently asked questions to go with this. Do you have to itemize to get this deduction? No, you do not. It's an above-the-line deduction. Is all overtime tax-free? No, the premium portion above your regular rate is what's deductible up to the annual caps. Let's say that you're salaried but get an extra pay for long weekends. Does that count? Only if you're non-exempt and it's true FLSA overtime. Many salaried roles are exempt from this provision. Will my paycheck go up right away? Will you see immediate benefit in your paycheck? Unfortunately, not in 2025 because the IRS has chosen not to change the withholding rules, so your withholding is going to stay the same even though you actually aren't going to be taxed on that. They're going to be withholding tax on that. So you'll actually see the benefit in 2025 when you file your tax return, unless you change your W-4 or change your estimates. So what do you do next? You want to verify that you're a non-exempt employee. You want to track your FLSA overtime and model the deduction against the caps and phase-outs. And if you found this video helpful, make sure you hit the like and subscribe button and send it to a coworker who puts in serious overtime, and I'll make sure to bring updates as we learn more from the IRS.